While Joe Biden is trying to cut off China from rest of the world, European leaders, known for their hard stance towards Russia, were suddenly embracing Chinese President Xi Jinping. Many doubted if Europe was turning to China for assistance in dealing with its geopolitical rivals. The answer was far from clear, but one thing was certain: Xi Jinping's relationship constituted a turning point in the complicated relationship between Russia, Europe, US, and China. The question on everyone's mind is, why is the US silent? And why large European companies like Volkswagen are turning towards China? Let's find out. Hey folks, before we dig into it, from our last video we found out that many of you are interested in crypto. So to help you guys out, we have found a crypto course which will help you with investing your money in major cryptocurrencies like Bitcoin. Check the link in the description box after watching this video. Okay, let's carry on. European leaders have been approaching to China's President Xi Jinping, even as Russia maintains its no-limits partnership with China. During a visit to Beijing, French President Emmanuel Macron was seen standing next to Xi Jinping, asking with him to use his power to bring Russia back to the negotiating table. This was an unexpected decision, given that China has not publicly condemned Russia's activities in Ukraine and has instead expanded its ties with the Kremlin. The EU's relationship with China has been on a strange journey over the past decade. While an investment deal was reached in 2020 after years of negotiations, it is now on hold due to political differences and China's sanctions on European Parliament members who criticized their treatment of Uyghur Muslims. Despite labeling China as a system rival due to its aggressive behavior in the South China Sea, the Europe recognizes China's rising economic power and potential as a partner in tackling global challenges. As tensions continue to rise between the Europe and the US over trade, climate change, and Iran sanctions, Europe may increasingly turn to China for support. This raises important questions about the future of transatlantic relations and the potential risks and benefits of Europe's shifting geopolitical alliances. Europe is currently facing a massive energy crisis that threatens to derail the continent's economic recovery. The crisis is being driven by a variety of factors, including supply chain disruptions, extreme weather events, and geopolitical tensions. As a result, European leaders are increasingly turning to China for help, a move that is straining the continent's relationship with the United States. The heart of the crisis is Europe's dependence on imported energy. The continent relies heavily on imports of oil, gas, and coal to meet its energy needs, and disruptions to these supply chains have led to shortages and price spikes. This has been exacerbated by extreme weather events, such as the cold snap that hit Europe in January 2021, which increased demand for energy and put further strain on already stretched supplies. As you all know, Europe's relationship with Russia, a key supplier of energy, has been strained in recent years due to disputes over Ukraine and other issues. This has led to disruptions in the supply of natural gas, particularly in Eastern Europe, where countries like Ukraine and Poland have been hit particularly hard. In response to the crisis, European leaders have been seeking out alternative sources of energy. Many have turned to renewable energy sources like wind and solar, but these technologies are not yet able to meet the continent's energy needs. As a result, European leaders have been turning to China, which has become a major player in the global energy market in recent years. China is now the world's largest producer of solar panels and wind turbines, and is also investing heavily in nuclear power and other forms of renewable energy. European leaders see China as a key partner in their efforts to transition to a low-carbon economy, and many are looking to Chinese companies for help in building new infrastructure and developing new technologies. But the move towards closer ties with China has not been without controversy. The United States has been pushing European leaders to take a tougher stance on China, particularly over issues like human rights abuses and intellectual property theft. These tensions have been exacerbated by the recent energy crisis in Europe. The United States has been critical of Europe's dependence on Russian energy and has been pushing for the continent to reduce its reliance on imports from countries like Russia and China. As a result, European leaders have been looking to diversify their energy sources and reduce their dependence on any one supplier. They are also looking to build closer ties with China, which they see as a key partner in their efforts to transition to a low-carbon economy. However, the crisis also highlights the growing tensions between Europe and the United States over energy policy. The energy crisis in Europe is like a brewing storm that threatens to derail the continent's economic recovery. Take the case of German automaker Volkswagen, for instance. The company has been grappling with a shortage of semiconductors, a key component in the production of its vehicles. This shortage has caused disruptions in production, leading to a decrease in the supply of cars. As a result, Volkswagen has been forced to slow down its production lines, leading to a drop in revenue. But it's not just supply chain disruptions that are causing the energy crisis in Europe. Extreme weather events, such as heat waves and droughts, are also playing a significant role. These events can disrupt the production and distribution of energy resources, leading to shortages and price spikes. All of this is creating a perfect storm for European companies, many of which are finding it increasingly difficult to operate in such an environment. That's why an increasing number of European companies are turning to China for help. Take the example of Swiss chemical company Clariant. In 2019, the company announced that it was expanding its operations in China with plans to build a new production facility in the country. The move was aimed at helping the company reduce its dependence on Europe and gain access to the Chinese market, which is expected to grow significantly in the coming years. Similarly, French oil giant Total has been investing heavily in China in recent years. In 2018, the company announced that it was partnering with Chinese energy firm Shenergy to build a liquefied natural gas terminal in the country. The move was aimed at helping the company tap into the rapidly growing Chinese LNG market, which is expected to become the world's largest in the coming years. For Volkswagen, the decision to tailor its models to Chinese customers' wishes was a smart move. The in-dash karaoke machines may seem like a small addition, but they speak to a larger trend. Chinese consumers want cars that are not only functional but also fun and entertaining. By catering to this demand, Volkswagen is able to capture a larger share of the market and cement its position as one of the top automakers in China. Similarly, BASF's and European chemical companies' decision to invest 10 billion euros in a new chemical production complex in China is a testament to the country's growing importance in the global economy. With 30 production facilities already in place, BASF is betting that China will continue to be a major player in the chemical industry and that its investment will pay off in the long run. Of course, these investments come with risks. The ongoing trade tensions between the US and China have created a great deal of uncertainty for businesses operating in both countries. Companies that are heavily invested in China risk becoming targets of US sanctions or other punitive measures, which could hurt their bottom line. Despite these risks, however, European companies are still bullish on China. The country's massive market and favorable business climate are simply too attractive to ignore. And as Martin Brudermüller, BASF CEO, notes, earnings from China are essential for his company to offset the losses it incurs from Europe's high energy costs. It is clear that China will play an increasingly important role in shaping the future of business and commerce. In conclusion, European companies' increasing investments in China can be attributed to several factors, including China's massive consumer market, favorable investment policies, and the ongoing energy crisis in Europe. While these investments may seem to go against the US-led efforts to isolate China economically, many European executives argue that such investments are crucial for their businesses' growth and profitability. It remains to be seen how this trend will evolve in the coming years, but it is clear that China's rising economic power will continue to shape the global business landscape. Tycoon territory.